Hi everyone, welcome to Tuesday, where of course we take a look at the performance of the NZX50, being the main board for the New Zealand Stock Exchange. Before I jump across and share my screen, obviously the normal housekeeping rules that this is intended to be educational purposes only. No way is it taking your own personal financial situation into account. That you do need to have a chat to your own financial advisor. But just the last reminder as well, tomorrow I am doing the free webinar on KiwiSaver and retirement. It's only an hour long. Love for you to join me. I will put the registration links in the show notes and come along and see what you can learn. Bring your questions, happy to help and address them on there. So love to see you. Here we go. We've got the main board for the NZX50 up on the screen, and you can see here that we actually did have a positive week last week, which is great. I've been saying this for a while that we do sort of need to have a few more positive weeks before, for me, whether the New Zealand market is going to be a suitable candidate to start looking for buying opportunities within it. Let's jump over and put our 200 period moving average on, just so that we can see where perhaps that market is heading. You can see here, yes, we are trading above the 200 period moving average. Like I've said before, it does look like it's really sort of hit a bit of a sideways pattern. You can see here we've got a sort of that solid line at about that 12,000 point level, and it's really just sort of flattened out along there. But you can see that the New Zealand market is trading at around 12,500 points. So that is really good. Let's take that one off and let's put on our normal moving averages, being our 30 exponential. Okay, and yay, we are just above that moving average, which again is a good sign, because to me, when shares are trading above their moving average, it is potentially a sign that they could rally further. Obviously, there will always be tops and they will fall off. Where that will happen, who knows, but the trend favours obviously what a share is doing. So if its share is trading above its moving average, the trend sort of favours that it will continue to do so. If a share is trading below its moving average, then again, that can continue to happen. The thing with an indices, though, versus an individual share, because this is the NZX50, so on average, it's the top 50 companies on the New Zealand Stock Exchange. Yes, there will be times where there might be 48, 49 shares or 51, 52 shares in that indices. The thing to remember, though, that if a share goes through a really poor performance period, it will automatically be removed from the indices. So if you're an investor that is buying into an indices, the NZX50, then you don't have to worry too much about what shares are actually the holdings, okay, because that is what Smart Shares, being the provider for the service, that's what they will automatically do. They will automatically take care of the shares that make up the ETF, the exchange traded fund, if that's what you're buying into. Okay, I look at this purely on the basis for buying individual shares. That's what I'm actually doing. Right, let's put our moving average on to see if we've got any difference here with the 15 period moving average. Right, as you can see, that 15-week moving average has got really, really close to the 30. Still hasn't broken through. I want to see that blue line, which is my 15-week, I want to see actually cross through that 30. And then that refers to a golden cross. And that can indicate that the market on the whole could keep running forward, okay, and keep obviously performing. And that's the sort of thing that I want to see. So that hasn't happened yet. Let's just go and take a look on the 1 year, which will give us the daily charts. And you can definitely see here that we've actually had 3 days in a row of downward performance on the New Zealand market on the main board. And we've still, even though the 15-day has crossed through the 30-day, and that happened around the 7th of May this year, it hasn't crossed to the downside, but we've still had 3 trading days in a row where the market has come down. So I would want to be seeing that this 15 period moving average is above the 30, which it is on the daily. but I would also want to be seeing exactly the same thing on weekly. Because for me, I'm a medium to longer term trader. I'm not looking for quick wins. I'm wanting to ride trends, if you like, that do last for longer periods of time. I'm certainly not into trying to in and out a market over a very short period of time. So that's why I'm waiting to see that 15-week cross through the 30 before I look to do anything further in the New Zealand market. And it's been a little bit sort of hit and miss really for a little while. If I go back out, you can see here that we've almost been fairly range bound since basically about April 2021. It's sold off. We haven't hit those highs. We are still a wee way off it. We're about 1,000 points or $1,000 off hitting that level. So we've still got a wee way to go before we can hit some highs, which is quite unusual because a lot of the other markets around the world are trading at their all-time highs. But for some reason, not us. So that's something that we need to take into consideration. So I'll stop sharing. So that's it for this week. We'll just keep an eye on this New Zealand market, see what's happening, see if perhaps this week brings any changes, because it would be great to see our market have a really good, strong performance. At the moment, it's just sit on the fence, wait and see. And the opportunities will come, okay? And I've said this before, that just because you might be wanting to get into share trading, share investing, that sort of thing, sometimes not buying is actually still making an investment decision. And that's certainly where I am at the moment. I would rather wait and see that my setups are all right than just feeling like I have to go ahead and make a trade because that's what I should be doing. Definitely not the right reasons for doing it. But anyway, look forward to seeing you on Wednesday. It would be great to have you join me for the retirement and KiwiSaver webinar that I'm going to be running. And remember, if there is a share as well that you'd like me to review, or if you have any questions regarding the share market, let me know and I will definitely do my best to address them here. Till next week, take care.